Hi everyone, this is Doc again, and today I wanted to talk a little bit about rare earths. Before we begin, however, there's a small disclaimer that none of this is investment or financial advice. Please contact your financial advisor or the equivalent of in your country before you make any investment decisions. This is just my thoughts that I'm sharing on with you, and please view the disclaimer in the description before you proceed with this video. So today I wanted to do a small segment on geopolitical alpha again. That's something I made a video about on antimony a few days ago, and I wanted to talk about the next thing to think about, sort of, which are the rare earths whose supply is quite constrained in terms of the processing capacity outside China. Now, to talk about rare earths, first let's talk about the two kinds of deposits. Not all rare earths are equal. Within rare earths, there are about 17 different elements. The heavy rare earths are the most precious ones, and the ones that have a lot of applications that make them strategically important. But there's also further subtypes of deposits that host these rare earths. Now, the two main kinds of deposits are the ionic clay deposits, and not the two main, but the major deposits are ionic clay deposits, as well as the hard rock deposits, and they have several subtypes. Now, ionic clay deposits are essentially the rocks that have weathered or basically disintegrated over millions of years under, the nature's elements. So what it does is it makes these elements, which are rare elements, they're not rare, but they're hard to find and they're in small concentrations. And the metallurgy is somewhat difficult, and that tends to be like the bottleneck. What weathering over millions of years does is that Mother Nature makes these elements somewhat separated from each other, somewhat like disintegrated, and it makes the metallurgy or processing of these elements a lot easier compared to like if you were to get them out of like a hard rock deposit. So that one, it's a simpler metallurgy in an ionic clay deposit. Two, it makes the metallurgy easier and it makes the deposit a lot more economic. At the end of the day, for any sort of mining or extractive venture, you have to look at the fact that is this thing economic? Am I going to get my money back? You have to think about it like an owner. So the ionic clay deposits, as Mother Nature would, the whole world is not well endowed with these deposits. They tend to occur in different clusters and concentrations. The two main concentrations happen to be in China, and we see that the current geopolitical climate is making us move away from China to securing our supply in the Western Hemisphere or in friendly nations. The second and the third most important deposits of this kind, the ionic clay deposits, happen to be in Brazil and Chile. And I'll talk about a few names in Brazil and Chile that are interesting and that I'm personally invested in. One of those, and those are some that you can consider. There's one in Africa as well. We'll just talk about it for fun. Um, but yeah, the first one is ACLARA Resources. It is an ionic clay deposit. In Brazil, they have a smaller deposit called the Penco module in Chile as well. They have a great CEO. You should watch his interviews. He's done some interviews on Fox News, CNN. He does a better job, much better job than I do, which he should, explaining the strategic importance of these rare earths and how all this works. Those are some excellent interviews. If you are interested in investing in rare earths, you should watch them. Aclara has their larger deposit in Brazil and a smaller module in Chile. They are progressing along the permitting timeline pretty well. They have backing from the US government. They are setting up a facility, which is essentially a refining facility in Louisiana, and they received about more than a $40 million grant from the government. So you have some strategic shareholding, not shareholding, strategic backing from the government. But if you also look at the share structure, it's an excellent share structure. This was spun out of the Hochschild mining company. Hochschild is a gold and silver producer, silver primarily, but they also produce a lot of gold. And the Hochschild family owns more than 50% of the company. There are other strategic shareholders like the iron company Cap SA from Chile. They happen to hold a large amount of shares in the company, so it's a very solid share structure. The owners are aligned with you. Um, and it's an excellent deposit with the government backing. And actually, what they're trying to do is create a vertically integrated enterprise where they have the source of these rare earths, they have the processing, and they have the end user. They already have contracts, offtake agreements, and MOUs and memorandums of understandings with different companies. So the pipeline is pretty well set. Now I'll talk about, like, they're not a neighbor like right in the proximity, but like in Brazil as well, a large, very large deposit called Meteoric Resources. Now this company was going for like under $100 million maybe last year, but now the market cap is up to like 500, I believe. It is a large deposit as well, not quite as far along as ACLARA would be, not quite as de-risked, but overall the premise is similar, that it's a high quality, large deposit of the Ionic clay variety in a friendly jurisdiction, in a Western friendly jurisdiction with Brazil. We've had some tussles with Brazil when it comes to like tariffs, etc. But overall, Brazil and the United States have had a good relationship. The United States has actually a trade surplus when it comes to Brazil. So whether these temporary humps become bigger problems remains to be seen, but it's unlikely. And we also have to think about the strategic importance of these deposits and the strategic importance of the products of these deposits to the country. And the signaling from Washington with all these grants and backing indicates that this is strategically important asset. There's also not no tariffs on strategically important materials such as rare earths. So that's another thing you can verify, but that's my understanding. Okay, so now we're talked about Meteoric as well, which is not as far along, but also a very promising deposit. This could be a really good takeover target for ACLARA, because if ACLARA's share price or market cap increases and they get to a higher multiple, it might be easier for them to issue shares to make this an accretive transaction, because they're developing all the downstream pipeline facility. They understand the deposits, and if they have a proof of concept, it would just enable them to increase their reserves by issuing their shares, which is basically a higher valued currency to acquire Meteoric. As a shareholder, this is something I would be okay with. That's accretive dilution. There are some other deposits as well, which are pretty similar. VERDIS Mining has a resource called Colossus, and that's an interesting one I've been looking into. The market cap's pretty low, and that could also be like a takeover target. I'm not sure if they want to develop it, but to be honest, I haven't done enough due diligence on that. ACLARA is the one that I hold. Meteoric is the one that I'm studying. VERDIS is another one that I'm looking into. And then there is a company called VERDE AGRITECH, which is agricultural product producer. They produce fertilizers, I think potash, etc. They also seem to have found rare earths, but I haven't done a lot of due diligence looking into it. When I've been able to find like two really fine deposits, then the interest that I have in looking at marginal things becomes less and less. So I haven't spent a lot of time looking into these, but these are some names you can look into. There's another one in Uganda, and I just wanted to put it out there because I found it was an interesting story. It's an interesting story, but albeit a little confusing. They have a similar ionic clay deposit in Uganda. It's an Australian listed company, IXR, Ionic Rare Earths. Um, and the deposit is large, but it seems like the grade's not as good as the grade we see in ACLARA as well as in Meteoric or the Brazilian counterparts. So that could affect the economics of this deposit. At the same time, I saw that the management got a grant from the Irish or the UK government, and they are setting up like a recycling facility for rare earths within the UK, and they're strategically positioning themselves as a strategically secure source of supply of rare earths. Now, the production that comes from this recycling is actually pretty marginal. And to me, like, I'm not sure if they're using this grant to actually fund like a refining facility or a recycling facility. If it's a refining facility, then yes, it's like they're trying to copy the ACLARA model, or they're developing their own model. Which makes economic sense. But if it is purely like a recycling facility, then I don't understand the story. Are you a recycler? Are you a producer? Are you a mining company? What are you? Or are you trying to be an integrated company like ACLARA? So I think like if that team wants to get the message out, I think they should do a better job at investor relations and get this story out. Because if they're trying to do the ACLARA model in Europe, then this could be like a strategic supply source for Europe, pretty much like a parallel to what ACLARA is trying to do. although that doesn't necessarily mean that they have the highest quality deposit. So if I was to pick one, and this is not financial advice, this is with a heavy bias and my own, vested interest in terms of what I own. I own a Clara because this story is simple. It is almost a tier one deposit. It is a tier one deposit when it comes to rare earths. The cost of production, if you were to take out China out of the equation, they're in the best cost quartile, or they're predicted to be in the best cost quartile. And when we also have to consider this and juxtapose this with the fact that the governments are trying to place price floors because otherwise the production would not be incentivized. What happened in the past was because of the production cost being so low in China, our industries in the West couldn't compete and they died off. So to make sure that these investments are not short-term investments where the people who are investing lose their money, the government had to make sure that the investment is incentivized with a long-term strategic view towards defense as well as national security. So I think the price floors under strategic metals is a great way of doing it. It also brings a lot of employment back to the West, which I think is important, as we've seen a hollowing out of the middle class in the Western nations. I think bringing that production back would also help sort of this K-shaped deviation that we're seeing in the economy. And this is just, speculation, but these were some thoughts I want to share with y'all. With that being said, it's nice talking to you, and have a good day. Bye-bye.